Hey, what's good, y'all? It's C Will, and this is the Passive Income Network. On this podcast, we talk about creating assets that produce passive income. Make sure y'all hit that like button, subscribe, leave a comment, and say what's good. On this episode, we have a special podcast feature. It's actually a reoccurring guest, and he's coming to break down macroeconomics, talk about Algorand tokens, and things of that nature to educate us so that way we can be ahead of the market and not behind the market. So again, welcome back because you're bored. Algo fam. Hey.
Yo, what's up, C Will? How you been?
Oh man, we've been good over here making it happen. Making some trades. I'm looking at your breakdowns on Twitter and whatnot, and I'm comparing them to the things that I'm doing, and we striking over there. So
I see.
it's exciting. How you been?
I'm doing great. Getting settled in. Me and my wife, we're getting ready to move into a house, so that's been a lot of work. And same. Seeing patients daily. Keeping everybody healthy,
Yep.
but keeping everybody as much as I can informed in my Twitter account.
Oh, for sure, man. And they love it. Some people they tell me they're a little shook on your delivery, but it's been real. Everyone agrees that the info is accurate and correct. But again, so shout out to you. I dig it. I like it.
Yeah, I mean, if you want to know truly, that sort of like a bulldog style is sort of how I've made my way through medicine because there's a lot of pitfalls to the way medicine's delivered, how people are paid, and you
Yep.
just have to sort of just go into the uncomfortable to find what you need. So, and I will say thank you to the Algo fam, and special thanks to Stacy for not blocking me yet.
Yep. Sorry.
Because not everything I have put is right, and the Algo fam has really helped me where I have made mistakes, but here we go.
Yeah, you can't be 100%. We're just looking for mostly, and then we can compare it to what we are knowing out here. But man, let's just dive on in. How you want
Yeah,
to start this?
well, I just think it's a great spot to just think about, everyone's, now we're getting a little bit of upswing in crypto, and everybody is thinking this is bottom. And there's many things to point to that it can be bottom. But, what caused this turn? I think many people will look at the chart and that gives you historical data, but it does not tell you exactly what's happening on the ground that's led to it. I
Yep.
think I think people need to understand that there is a uh, that stocks and crypto are eventually supposed to decouple. If crypto is going to exist, there has to be a decoupling at some point. So identifying the difference between a stock and crypto is probably a good point to understand how and what moves crypto markets, at least in my opinion. Uh,
Okay.
you know,
That
for,
makes
what is the asset class of crypto? Well, I think the asset class of crypto is a proxy of the inverse of monetary policy. When the monetary policy is tightening, uh, you know, it's going to go down. Whereas stocks is an asset class proxy for the economy. So for crypto, you need to base your uh, investment decisions based on Fed monetary policy, because these are two different things with their own drivers. Uh, both stocks and crypto drivers happen to coincide intermittently, and that's why they move together. For instance, the Fed has been on a rate hiking cycle for the past 6-7 months, and
yep.
that's bad for both crypto and stocks. So that's why you would expect them to move together, and it's why the Bitcoin correlation with the S&P has been as high as 80%. But moving forward, there's different things. For instance, crypto. It's about the Fed monetary policy reset. Incre- you know, the increasing rate hike expectations as of last Friday has has peaked. Waller said the terminal interest rate is 3.5%, and if that's the case, then crypto should not have to worry about any further tightening. So that would be a great decision that it's bottom because the Fed is not going to only tighten any further. But that's what they say. These things change.
Yeah.
Uh, on top of it, a reason why this could be bottom is, just the major capitulations. It's sort of hilarious that the institutions are capitulating to retail. Terra blew up, 3AC's bankrupt,
Yep.
Celsius bankrupt, Voyager,
Celsius,
Musk even capitulated yesterday. I mean, this is
75% he sold.
significant headwind in the crypto space. I mean, a lot of forced selling, and you got to ask, well, what's left? Well, there's definitely been interest in whales trying to liquidate Saylor, but he's very savvy with the way he's portioned his debt. So I don't think they'll ever get him. But so that's crypto. But what about stocks? Tightening financial conditions will actually hurt the economy. It's not worried about, they both depend on rate hikes, but stocks depend on conditions that will hurt the economy. Stocks are a
Yep.
proxy for the financial economy, but the financial economy still depends on the real economy. If the real economy is okay, stocks can go up in anticipation of more economic growth or stimulus, and that would make the multiples they're given worth it. But the problem is the economy is not okay, and future stimulus due to inflation. So due to inflation, the Fed and government, government is fiscal policy and Federal Reserve is monetary policy. They can't stimulate because that'll only quell inflation even higher or push inflation even higher. So, even if the Fed is done hiking, there is no stimulus coming. And I think that's a key point, because right now we're stuck in the middle of earnings season, and you are already seeing corporate margins take an enormous hit right here, because we're starting to see the teeth of inflation. That's really hurting the companies, because if inflation hurts, if inflation is going to be higher, then it's going to impact your cost of our operating costs. And if nobody has any money, then it's going to hurt your revenues. So you're getting squeezed on both ends. So the economy is in real trouble. That there is no doubt about that. And, so I think just moving forward, I think you need to really, or for me, at least I do, is I try to delineate the difference between what the asset class of crypto is versus what the asset class of stocks are, because they have a lot of overlap, but there is key differences. And that difference is really what should drive your decisions of where do you think the general market is going.
Well, right now we see that we had I guess a dead cat bounce, right? We have a little pump. I was talking about this earlier, but made a couple shorts. I put some shorts in around 38 cent with Algorand. But so you saying, which I think too, and some of the other experts is like around, after these next Fed hikes heading towards fall, we're gonna hit the real bottom right now, or what we had recently isn't the bottom. What do you think about that?
Well, again, it's bringing it back to what determines bottom again, because if bottom is not here, that means the Fed is not hiking. The Fed actually is undershooting their real terminal rate, because if they're going to hike even higher than what the market is predicting, then you can guarantee crypto is going to take a leg lower. My problem is I was too hawkish, and I had the actual terminal rate around 4%, because what is driving inflation? Well, currently it's oil, it's energy.
Energy, yeah.
Oil, yeah, because it doesn't matter if oil is high, then it's going to, and that's what's currently driving our inflation, is these energy prices.
So it's not wages.
Not wages, not yet, but there could be a transition to wages. But for right now, Putin has a lot of control over the United States, because he certainly controls the oil supply, and OPEC is definitely working together, because they're missing outputs. They're missing output cuts. They're doing a lot of things that would keep oil prices high, because they know it's going to hurt the United States. I mean, definitely there is a lot of geopolitics here.
Yeah, it seems like, okay, this is how I seen it with the news with Saudi Arabia, right? Are they part of the OPEC?
Yeah.
No. Okay, yeah, so perfect. So it seems like what Russia is doing is selling, to the Saudis at a discount, which they're still making their profits. And then the Saudis are hoarding their own oil and then reselling the Russian oil to the West And it seems like that is what happening. And then you got companies like Shell, Chevron, and them are recording record profits regardless of the situation. Um, and it's
Yeah,
getting
I mean,
very, very interesting. And America is definitely not in a great position with this oil, and it could be, but they're not.
yeah, I mean, and you're sort of touching on it. Is I think one of the greatest things that are unfolding in markets right now is the fact that Putin is actually deploying what they call the petro ruble.
Petro ruble. Okay.
Yeah, the petro ruble, because Russia, because Russia has all these sanctions against them,
Yep.
and because of all of that, they, you know, because of that, they cannot do transactions um, with banks.
Yeah.
Because these banks are not, they're not able to
The
work with
Swift
Russia.
banking system. Mhm.
Excuse me.
The Swift banking system,
Yeah,
like
so
the
right.
big global.
Yeah, so what's happening is Deutsche Bank has said that it's going to fix about 5,000 rubles for 1 gram of gold. It's back in March. You
Yeah.
know,
I remember you
so
were
what that,
posting.
yeah, so what they're
Yep.
saying is, okay, if you want our oil, and they've actually expanded this to fertilizers, grains, and anything. They're basically saying, uh, if you guys want our oil, you got to first buy gold, give us gold, and at
Yep.
that conversion rate, they're going to give you rubles. They're only going to, and then you use those rubles to buy energy, fertilizer, and whatever you need. They're only going to do it in rubles. So by doing that, he is defending the ruble, and so that's why these sanctions have no teeth on Russia, because the ruble is actually stronger, or just as strong as before the sanctions even started. So not only is Putin protecting his currency and breaking the dollar, breaking the dollar's control over energy, but he's now actually using this against the European Union. And I think the most underreported story right now is the fact that I think NATO and the European Union are becoming fractionated. They're breaking apart. They're starting to pick sides on if they really want to go the distance or they don't want to go the distance on with Russia. You know,
With the
it,
sanctions and all that.
well, yeah. I mean, you're seeing a lot of leaders lose their office recently. I mean,
Boris Johnson.
Boris Johnson was given a no
He
vote
was
of
doing okay.
confidence, but the
Yeah.
thing is, they say it's a scandal. But he was also one of the biggest proponent of trying to form a military coalition with Poland and Ukraine. He definitely was trying to arm Ukraine the most, and he was voted out immediately. Italian Prime Minister Draghi resigned last week and he was supporting
Oh,
sending
wow.
weapons to Ukraine. That's two. Then you've got don't forget about the Bulgarian election with I think it's Radov that got elected. 70% of the Bulgarians want to have a neutral stance on Russia, and they don't want to deal with all of this. So they had the election back in November, and both Radev and his opponent, they had the exact same views on pretty much everything, except the one distinguishing issue is whether Bulgaria should recognize Crimea as Russian. And so guess what? The guy that said it should be recognized as Russian won by a majority, and nearly 70%. So they have a super majority in Bulgaria. So this is what you're seeing. You're seeing new governments being voted in that have a much more neutral stance toward Russia and not such aggressive tactics as we're used to.
You know what?
And
I'm also seeing that these sanctions and regulations, right? Like a few of these countries are saying they're gonna, cut Russian importing of oils. You all right? No, you good, fam.
oh my god.
We'll cut that out.
Holy
Yeah.
hell. All
Yeah,
right,
there you go.
keep
You
going.
gotta breathe. Yep.
But
Uh,
keep it in.
where are we at? Oh, so
Keep it going.
what? So these companies were saying, or these countries basically are talking about these, the sanctions, right? Sanction after sanction. But when you do the research, you realize they're talking about 9 months out and things of that nature. So they're still importing. You got, I believe it was Norway or Sweden is now got to pump up their oil to help out the rest of the UK. And so it's just definitely a chain reaction. But the sanctions are, more in the future than they are currently now. So these conditions seem to be might get worse if they actually really cut Russians oil for most of Europe
Well,
this winter.
well, that's why we're seeing bringing it back to the market. And what is if bottom is in? If
Hmm.
the European Union makes a deal with Putin to give him Western Ukraine and the land he wants,
Yep.
they can get the oil back on, and
Yep.
that'll decrease the energy inflation. That will then put in a bottom for the energy pushing the CPI. But
Yep.
the problem is Zelensky and uh, a lot of NATO members are like the Lehman Brothers when they refused multiple bailouts before the company collapsed. I mean, these leaders are not getting the picture. And
Mm.
what's I think one of the most interesting things going on right now is between Lithuania, Hungary, and Ukraine. For instance,
Yeah. So what's happening? Yeah.
Hungary is a NATO member,
Yep.
and well, notice that Hungary has been blocking uh, European Ukraine's effort to get European Union to set sanctions against Russia. So you have a NATO member voting against a non-NATO member, and then Ukraine has actually threatened to bomb up the pipeline of gas to Hungary. I'll send you the links to
Yeah.
these.
Please say
But
that. That sounds crazy.
yeah, so that's an obvious escalation between the Hungarian President Orban and the increasingly loner, which is Zelensky. So in other words, so who would NATO support in that situation if there actually is a conflict? Are they gonna support a non-NATO member in Ukraine because of Russia, or are they gonna support their NATO country Hungary? Because remember, Ukraine is not in NATO.
Damn.
So they're basically tired. They don't want to risk the energy crisis and cold winter for their people. And so that's just one. But then you have Lithuania, who's another NATO member, and they are refusing to let Russian goods travel from Belarus to Kaliningrad. Now, Kaliningrad is a sort of like Puerto Rico for the United States. Like, it's not a part of the main country, but instead of being in the middle of the ocean, it's like in the middle of Europe. It's like this little spot that's not
Random.
attached to the mainland, but it's Russian.
Mm.
So they're refusing to let goods travel. So, don't be surprised if Russia invents some pretext to go hot with Lithuania. And, Lithuania being a NATO 5 member could trigger Article 5 of NATO. But I think what we're seeing is I don't think NATO wants that, in a way. I don't think they want
No.
that. So, until they figure this out, I think the energy crisis is going to be at Putin's will, because him and OPEC will just cut the pumps, let the pumps go, cut the pumps. I mean, the Saudis told Biden increase output by like 1 million barrels, which is like spitting in your face,
Yeah, basically
so,
nothing. Yeah.
So yeah, we're increasingly alone, and then our old allies are getting voted out. So, it really is very tough to judge bottom because, as I said, energy affects inflation, and inflation affects Fed policy, and Fed policy directly affects crypto. So,
The crazy
it's like,
change.
yeah. So, when I'm viewing markets or what I think, I mean, there's a lot of things you have to, from the geopolitics, the economics, and whatever. So, it's almost too much. It is too much. So you just got to stick in your lane, and just keep having fun with it. That's why I like it. It's sort of so fun to sort of see how this stuff all plays out.
Yes. Let's talk about more about inflation.
Okay.
Could we
So
break down some of these
so yeah,
charts?
I mean, well, so let's see. Inflation is was completely missed by the Federal Reserve back in 2021. They kept telling us that it was transitory,
Yep.
and they did that for about a year, and they lost a lot of credibility because they have literally missed that call so bad. I mean, so bad. So now we're stuck in a very high inflationary environment because we've got extra dollars circulating that shouldn't be there. These dollars that were printed were actually put in directly into the economy, which when you put money in the economy in the hand of the few, the rich, it goes into asset prices, and you get, a lot of asset prices increase. But when you increase the money supply and give helicopter checks to the common people, well, they use those on consumer goods. So thus there's going to be a repricing. So
Different
what
ways.
has happened is we've had a repricing upwards, and so with inflation running hot, people's the cost of living goes up. Now, if they keep giving helicopter checks, they could keep pace. But the problem is, because inflation is so hot, they cannot keep stimulating the economy. So now you have higher prices, higher costs of living, and a large majority of Americans have no money left. There's literally no
Savings
money
are
left
rocked right now.
Yeah.
Between
So
food prices, gas, and whatnot, it's just ridiculous.
what are we seeing here? We have the recession has already started. Let's make sure we get that understood, that the recession has already started. There is no maybe or is this. It's definitely a recession, because the economy, the U.S. economy is a consumer-based economy. I mean, 70% of its economy, consumption is 70% of the economy. We need people to buy our stuff. We need to buy
Yep.
stuff. So, consumers have already run out of their stimulus money, and due to the higher inflation, they're piling up credit card debt. That's why consumer credit is through the roof. Personal savings is through the floor. So people's savings from 2021 stimulus are running out this summer. So
Yep.
what happens? Many are struggling, and the economic activity is going to halt in the second half of the year, because people are out of money. So when they're out of money, they stop consuming, and once consumption stops, it's over for the U.S. economy. And especially worse because we can't simply flood the market again, or give stimulus checks without stroking more inflation.
Yeah. So what about debt? I know between, I believe, Japan and China, we have a big debt problem with them, if I'm correct.
Well, I mean, it just depends on. I mean, debt's everywhere. I mean, the debt to GDP ratio for the federal debt is like 120, 30%. There's like 150 countries that have had a debt to GDP ratio like that high,
Mhm.
and only one did not default. And I'm talking default, and not defaulting as in like an actual default, but as in
Yeah.
defaulting where they have to debase the currency. So that's technically the only Fed's way out is to do
Debasing the
that.
currency.
Um,
Huh.
yeah, but right now they're trying their hardest to act like they can do that, that they can stop the stimulus, but the real reason is they can't, and that's why everybody should be long crypto. Is we know that
You said
the
long
end game,
on crypto?
you have to long it, because eventually the dollar is going to have to go down. The United States will have to debase the currency to get their debt under control, because whenever they increase interest rates, that's the increased interest we got to pay on our government debt. So
Very.
it's getting quite tough,
Is,
because again, as I said, inflation hits the margins, making the costs higher, and recession takes revenues down. So thus corporate profits will shrink with less revenue. So earnings per share are going to plummet. And we had our GDP in Q1 that was negative, and then the GDP comes out after the FOMC next week, and that's definitely going to be negative. And then the third quarter, I'm expecting a collapse.
yeah, we headed to a depression. So okay.
Yeah.
Oh, no, I was saying that was a joke, but with interest rates, right? So if the Fed, now this is me theorizing right now. Hopefully you can answer this. So if we got interest rates raising, right, which means it's hitting all of us, all our corporations, all of us Americans here. What about the people who owe America's money, right? That means their
Well,
interest rate is up, which means we should produce more revenue, if I'm correct.
yeah. So what happens is you have these dollar. So what happens is when other countries borrow money in our currency, that means they owe interest in that currency that they not produce. So whenever the dollar gets too strong, it really causes debt contagion abroad. I mean, you've had multiple times where the strong dollar has caused serious economic collapse, and where they have to come meet together, and the United States actually has to purposely weaken the dollar. Definitely look into something called the Plaza Accord, where they've met, and the United States is forced to weaken the currency because these countries have borrowed so much in U.S. dollars they can't repay it, and so they default, and they can't print the money, so they can't debase it. They literally default.
Oh, so they default. So which means we won't get the money. It's like bankruptcy.
Yeah, so the country goes down into chaos. So that's why you're seeing with these strong dollars, you're seeing Argentina, you're already seeing Sri Lanka, you've already seen Turkey. You're already seeing the effects of a strong dollar on these emerging economies.
Smaller economies, yeah.
Damn. So you're seeing the impact of the dollar. And remember, the United States is protecting the dollar because it wants to. A strong dollar quells inflation. If you have a weak dollar, it takes back off. So it's a real cluster for the Fed officials.
Yeah, it sounds like they definitely are. They messed up, and this is bad because now we're a few years into COVID, and things are just still looking worse. So, question is this: for the average investor, not financial advice, but just some good informational advice. What could we be doing right now before we segue to Algorand? What could we do as the average investor?
Well, as you should never take financial advice from me. That's for sure.
Of course.
But
that's why I said no financial advice. Informational, as I said.
Yeah, so I think if, again, there is no certainties and there's only probabilities. I think that's a key concept that people should understand, that you might be certain, believe in your blood, or believe deep down your soul that you know the answer, but that's not, it's just not real. It's not true. You have to be able to look at both sides of the idea. And it's easy to get caught away in the projected and all the charts and, the stock to flows or whatever, but you have to be able to say, what is the risk? Because investing is about risk management. And if you don't know the game that's going on, you will not know what's causing the waves, what's causing the currents. As I said, the total crypto, every crypto company you can name, everyone, including Bitcoin, is still smaller than Apple. That's how small it is. So, of course, it's going to get pushed around by macro headwinds. I mean, this is not an asset class that could stand on its own, not yet. But it's so, as I would say, is with crypto, you definitely should understand what's going on at the Federal Reserve. That, I think, is a major impact. And I think eventually the Federal Reserve is going to have to pivot. I definitely think they're going to have to pivot. But for right now, I believe personally that there's going to be another leg down. I could be wrong, and this could be bottom, but I still think there's another leg down in both the regular markets as well as the crypto markets, not because of anything crypto, but because of what's driving the markets right now. And that's the fact that we have uncertainty. The market would rather know bad news than uncertainty. And we have so much uncertainty, which includes Russia has just restarted re-pushing military operations. I mean,
terms like because we're at other than Ukraine.
No, they're creating a larger response because remember, the Ukraine situation needs to be at a decision point. The market is priced and it's winding down, but Zelensky is ratcheting it up. I mean, America set these HIMARS rockets that now give longer range. You could hit Russia, so of course Russia's picking this up. My opinion is that this will not stop until Zelensky is out of office, and Zelensky keeps getting more desperate. I mean, he has just in the last few weeks, he's fired. What was I going to say? He's like, how was it? What was his key advisor? He's already I think he accused like 60 of his board members of treason, and he's getting real desperate. So, and for Russia's mind, I don't think they stop until Zelensky out.
Isn't he pretty new? No, he got a few more years.
Well, yeah, a few more years. Well,
unless they get rid of
how many more years did Gaddafi have? You know what I mean? Because it doesn't matter. Because I mean, Russia's going to bring him in as a war criminal. I mean, that's what I believe. Russia's going to go after this guy because remember, you should watch Ukraine on Fire, that documentary. The Color of Revolution in 2014 is where the United States did participate in the overthrow of the Ukrainian government to put in their sort of favorable Western puppet, which was Zelensky.
Isn't that always funny?
Well, it's true. And and the whole conflict is that, so without getting too much back on that, but yeah, so there's so much uncertainty with oil, which is the driver of inflation, that I don't feel safe with that. On top of Ukraine or China is heating things up in Taiwan, where they're now calling for the United States to have war crimes put against them. They're also, the news just came out today that they now have much better chips than we ever thought. So their semiconductor chips are far superior than what we thought. And if they squeeze off Taiwan, we're really isolated. So that would impact markets too. There's just so much. And
well, what about the new chip bill that potentially could pass, for Samsung, Intel, NVIDIA, AMD type of situations?
Yeah, it'll pass, but the problem is, hey, you need a Navy fleet to fight, in the water, but the problem is you have no ships right now. It's going to take time to build. And by the time you're building, you're losing ground. But, so I would just tell people to definitely manage their risk, definitely understand that crypto, maybe in the future, but as of now, moves based on events outside of crypto. And now when things are moving up right now, I think we're in a bear market. I think we're in a bear market rally. I think, this is typically a very bullish season for stocks. I think the Fed is trying to balance without plummeting markets, but I ultimately believe the markets are headed lower. I'm not saying collapsing, but I think they're headed lower. And so you should be prepared for that scenario if it were to occur, but also be positioned to ride it up if it does as well. So that's why I do a lot of trading, because I'm happy with my positioning, but I want to participate in the ebbs and flows of the market.
Yep, get that money. Okay, before we slowly start to head to the close, let's talk about some Algorand. I'm going to pull up Algorand. See the crypto, a digital face, 2021 fiat replace. Had to have it, bank account by Algorand, large amounts.